Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, we're going to be talking about the max pain we're seeing in the Bitcoin mining sector. It's another day, another red day for the miners as we see the price of Bitcoin continuing to show weakness. In addition to that, you guys, we're starting to see a real mismatch between the price of these miners and the book value of their assets, including the cash and Bitcoin or their HODLs that they have on the balance sheet. So we're going to talk about that in today's video. We're going to be providing some ranking metrics and some tables provided by our resident analyst, Anthony Power. So a lot to go through, but before we do, please take a second, hit the like button, you guys. It's 100% free to do. Anthony loves it. It's a huge help to the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're still holding strong in terms of your mining positions, if you've been taking this opportunity to accumulate more shares, and your outlook for the remainder of 2024. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, an action-packed hour for you. Anthony Power, our resident analyst, has put together some very insightful tables. We're going to be discussing the question we're hearing a lot in the comment section right now. What is going on with the miners? Should I be selling my position? This is maximum pain and I don't know what to do. So Anthony, obviously a lot of concern in the market right now, especially in the Bitcoin mining sector. How are you feeling today and what is your outlook here?
Yeah, I'm feeling good. I mean, the Bitcoin price has dropped a lot from its all-time high, but it's still, it's still over 60,000. And like a month ago, we would have been hoping it'd be over 60,000. So, we know it's volatile. We know things can change on a daily basis. But, we've also talked heavily about the impacts of the ETFs. And as long as the ETFs keep buying it, I can't see any way it's going to, drop significantly. Yes, there are some corrections and things like that, but there's an ETF approved in Hong Kong yesterday. That's going to bring in significant money coming through from China. So yeah, I feel quite comfortable at the moment. And actually, maybe it's if it gets any lower, it gives people more buying opportunities. That's why I look at it.
It certainly does, and you're right how 30 days really changes your perspective. It would have been unheard of 6 months ago to say we were flirting with all-time highs going into halving and that was going to be a negative situation for the investment community, but that's exactly what we found. However, Anthony, as we're going to see in today's video, it is presenting a great opportunity if you've got long-term vision here and belief in these companies. And we're going to dive into the valuations, some of the balance sheet metrics, and some rankings a little bit later, you guys, to really show you exactly what you mean. So to set the stage here, Anthony, like you say, we had general optimism out of the gates. We had the US ETF. We just had the Hong Kong ETF. We're starting to see different countries around the world actually get into their own proprietary mining. So a lot of positives going on. But on the negative side, we're seeing the short interest in a lot of these companies creep up. I know in a lot of situations, especially the big miners, we're seeing short interest in excess of double digits, over 10%. We're seeing continued GBTC or grayscale outflows at a level that's honestly quite surprising to me. I think we saw about $100 million of outflow yesterday, which was fairly good for a Monday. But considering how long the ETFs have been around, you'd think a lot of this would have kind of worked itself through. And then in addition to that, and especially in light of the events over last weekend, we've got enhanced geopolitical risk. And obviously, if Bitcoin is the only thing trading 24/7 and some of these events happen over the weekend, you're going to see pressure on Bitcoin, and that's exactly what we saw. So as of the time of filming, we're now sitting around 62,000. And unfortunately, the miners, they're definitely doing their job in terms of correlation right now, Anthony, because they're pretty much down across the board. And it's been like this for a couple of weeks now. So we've got a few tables, you guys. We're going to kind of walk you through in chronological order. So the first thing we wanted to bring up, Anthony, and this is something I've seen in the market a lot, not in the Bitcoin sector specifically, but you'll see these ditch-to-ditch corrections, whether it's on the good side or the bad side. You'll see general overreaction in the market. And that's what really leads you to over or underbought situations on the relative strength index. if you look at a lot of these companies on the RSI, they're extremely oversold right now, and that presents a great opportunity, again, to bring your average down and to load up on these companies if you've got that long-term view. So the first table you brought, Anthony, it shows the market cap, the enterprise value, which I know you're a big fan of, along with the cash, the Bitcoin, and the debt of each one of these companies. So why don't you walk us through what you're seeing here and this mismatch that we're talking about between the enterprise value and the amount of assets on the balance sheets of these companies?
Okay. So just before we start, we'll just set the scene as to the miners that we decided to include in this podcast today. And basically, we looked at the mining companies with a market capitalization in excess of 200 million, and those with a hash rate in excess of 2.5 exahash. We will do another podcast that covers the miners that haven't been included today, and then we'll do some comparisons. But to include all the miners, when we go through at the end, I'll explain a little bit more detail why it wouldn't have worked out in the same way. But so looking at what we did for the miners that fulfill the criteria, we look at market capitalization, and that's the number of shares in issue times the current share price. And that gives you one way of evaluation for a company. Now, in terms of valuations, we look at some of these mining stocks. It's always useful to use the enterprise value, because when you buy a company, you're not just buying the actual paying for the market capitalization of the company. You're also taking on board any debt within that company and also any cash balances in the company. So if you buy a company for $1 million and it's got 100,000 of cash, in the bank, and it's got, say, 50,000 of debt, you're actually benefiting by the fact that it's got cash in that balance sheet. So if you look at the enterprise value for that sort of company, you'd add the debt to the total market capitalization, which would take it to 1,050,000, and then you'd reduce that by the cash that was in the bank, and so you reduce it by the 100,000. So effectively your enterprise value would be 950,000 rather than compared to the $1 million in terms of market capitalization. So what I've done is for these mining companies, I've used the exact same format, but I've also used the Bitcoin HODL as well. Although it's not treated, in financial terms of cash and cash equivalents, when you consider Bitcoin can be sold, instantaneously, I've decided to include it in this particular scenario. So, we can start, looking at, like, from this perspective, the company with the smallest market capitalization just happens to be Bit Digital. So Bit Digital's market capitalization is 201 million, and that's as at this morning. So it's not taking into account the share price as we're talking in this podcast. But that was done before opening today. It's got an enterprise value of $74.7 million. So that's significantly lower than the market capitalization, which automatically sends a message out. There's a lot of benefit in this company in terms of it must have significant cash balances. And if you look at the cash balance itself, it's just under 17 million. That's the latest reported cash balance. And if you look at the Bitcoin and Ethereum that's held on their balance sheet, you've also got 109.7 million. So those two elements are deducted from the market capitalization. They don't have any debt whatsoever on the balance sheet at the last reported balance sheet. One of the very few miners to have zero debt. And so we've worked through the rest of the miners in the same vein as well. So if we take one of the bigger miners, look at, say, Riot Platforms. Riot Platforms market capitalization, this morning was 2.1 billion. It's come down significantly. I mean, that market capitalization was closer to 4 billion not that long ago. So we can see, as you alluded to earlier in the conversation, some of these miners have really dropped off since the start of the year. But their enterprise value is, again, it's significantly lower, 975 million. So that means, if you're paying 2 billion for this company, you've got some significant cash and cash equivalent reserves held within the company itself. And if you go on to the cash for Riot Platforms, they announced on their March update that they had 685 million. And they've also got 535 million of Bitcoin as at today's price. They've got a very small amount of debt, 21.3 million. So it's very, very, small. In terms of the market capitalization today, that's about 1%. So, adding those elements together there gives you, that enterprise value of 975 million. And so, enterprise value, you're able then to sort of like start making some comparisons across mining companies because you're using a metric that will cover all the same issues. So, some of these companies have Bitcoin in their treasury. Some of them don't have Bitcoin in the treasury. I mean, it's quite clear to see that Bitdeer, Core Scientific, IREN, and Wolf, are selling their Bitcoin on a daily basis because there's zero in their Bitcoin balance. But the rest of them have. And if you look at Marathon Digital from a Bitcoin perspective, even though the Bitcoin price has dropped in the last few days since their March update, they've still got over close to 1.1 billion in Bitcoin alone. And added to the fact they've got 325 million in cash, that gets them close to nearly 1.5 billion. And it was 1.5 billion as at the end of March. So the Bitcoin price has dropped a little bit, bringing that value down.
Now, Anthony, what's interesting to me here, I'll be honest, I generally look at market cap just because that's what's on Yahoo Finance. A few takeaways for me, we're starting to see the market cap of those top tier 1 miners really come close here in terms of flipping market cap. I know there's a close race between Marathon and CleanSpark always in terms of total market cap and share price. So two that really stand out, Anthony, we've been hearing a lot of discussion on X around IREN. So obviously they've got a large cash position, no debt on the books, over $300 million of cash. So that's definitely one that a lot of people are eyeing right now. And Hut 8 Corp with that huge hodl despite their depressed market cap. So we're definitely starting to see some value in this market or in this sector overall as these share prices continue to fall on the Bitcoin weakness. Now, the next table we have here, Anthony, kind of a continuation of that, talks about the share price performance year to date for each one of these companies. You'll notice only CleanSpark is positive. And it shows at the right there the price of Bitcoin or the percentage change in Bitcoin year to date as well. So as we're talking through this, we're starting to see very favorable balance sheets. Obviously, these companies have been issuing ATMs. They've been cashing up. They've been increasing their hodls in a lot of situations for the halving. You're seeing the impacts of that in terms of a positive sentiment. We're coming off one of the best months ever, possibly the best month ever in terms of revenue generation for these companies. With Bitcoin, again, flirting with all-time highs. The companies we cover mined over 5,000 Bitcoin in the month of March. So you're looking at hundreds of millions of dollars of revenue. Not to mention we've got transaction fees creeping up again. But the share price and the market cap and the enterprise value of these companies, as we're seeing in this next table, has dropped tremendously year to date, with a lot of these companies down 10, 20, 30% year to date, Anthony. So this is the mismatch we're talking about. And in investing, this is when money is made, you guys. It's when it's uncomfortable. It's when it's scary. It's when there's blood in the streets and you're able to stick to your due diligence and purchase shares and build your positions despite all of the other FUD or fear, uncertainty, and doubt we're seeing. So Anthony, what do you make of this next table? How on earth are essentially all of the miners down this aggressively year to date despite Bitcoin doing really well?
Yeah, and we can talk about CleanSpark first. I mean, CleanSpark at December the 31st had just over, literally a fraction over 10 exahash energized. And today, as we do the podcast, it's 17 exahash. So when you increase, the company by 70% in terms of operating hash rate, that's going to impact the share price. And that 33% increase, is the benefit of them getting that target online. Albeit, originally it was a target to be online by the end of December. They got it online most of it by February, middle of February. So they benefit from that there. But the rest of the miners, when we look at just to take away the Bitcoin side, because that's increased 50%, and on top of the fact it went up 155% in 2023 alone. The rest of the miners on average are down about 30% since the start of the year, and some of them are down even further than that. I mean, Bit Digital are down 56% since the start of the year. And I'm trying to scratch my head as to work out as to why some of these miners are down significantly. Yes, we've seen the approval for the ETFs, and we know there was a significant amount of money has been going into those funds because there's a direct correlation in terms of Bitcoin price and value of the fund. Miners aren't as we're never always as correlated to Bitcoin as that, because there are more moving parts in a mining company in terms of, you know, cost structure and things like that. So, yeah, it's challenging for people at the moment, but we know that you know, these scenarios have happened before, and then, you know, all of a sudden the Bitcoin price you know, rises, and the miners then will, you know, will pull back. So it's a case of, like, you know, wait out. I mean, that you've articulated quite accurately that the March numbers were phenomenal in terms of revenues achieved. You know, every miner, even though they were producing less Bitcoin than they did in February and they did in January, were able to book significantly more revenues. You know, the difficulty's been going up for 16 months now, effectively, without dropping. And so, you know, these companies were mining probably more than twice the amount a year ago in terms of Bitcoin itself. But because the Bitcoin price, you know, was at 70,000 plus at the end of March, they were able to book, you know, massively significant revenues on compared to previous months. The share prices just haven't followed at the moment. We are going to go through and start seeing a lot of the Q1 results starting probably in the last week in April and going all the way through May then. So we'll see what these companies for that first 3 months are going to book in terms of profits, because, you know, the Bitcoin price was 42,000 at the beginning of the year, and it steadily rose all the way up to 73,000. So it'd be interesting to see. I would expect, you know, nearly all these companies will be, you know, very profitable for that quarter position, because one, revenues are good. Two, those that are hodling are going to take benefit from the new rules in terms of valuation. And so we'll expect to see lots more green. We've had a lot of red the last sort of 2 years since we had those highs in 2021. So, you know, people think we're at the start of the bull run now. Let's see what the Q1 results look like. And, you know, as I said earlier, you know, the price of Bitcoin at the moment, if you would have said, you know, it's going to be 62,000, you know, literally just before the halving in January, we would have all taken 62,000, because we expected it to probably drop as we approach the halving. It's been on a real spike, and it's still up 50% as we speak.
Well, and the third thing, Anthony, is the transaction fees we're starting to see again. And this is where the adage comes from, you guys. The market can stay irrational longer than you can stay liquid. And that's exactly why you want to have some dry powder on the side, you guys. Our general thought is, yes, Bitcoin miners will cover or follow Bitcoin and the price of Bitcoin. But in terms of the time it takes to do that, it's anyone's guess. Now, if you were to look at this from an objective stance, Anthony, and you said, hey, the price of oil's up 50% year to date, what do you think the oil companies are going to do? Or the price of gold is up 50% year to date, what do you think the gold mining companies are going to do? Obviously, the answer to that is they're going to do well. The question is when, and I think that's where the concern in this sector is coming from, is people want the immediate results. But we need to remember, you guys, most people were targeting the miners to peak anywhere from 6, 9, 12 months post-halving. So you need to understand this is a highly volatile space, and this is not the time, again, not financial advice, my own personal opinion, not the time to be selling your mining stocks, because that goes exactly against the buy low, sell high mantra that we all know is the number one rule in investing. So it is difficult to look at your account. I think CleanSpark was down 12 consecutive days in a row. But when you start to look at the metrics, the percentage short interest, the RSI, the oversold nature of these stocks, the fact that Bitcoin is moving, the fact that we've got Q1 numbers coming out, that's where you get those perfect setups for huge upside surprises and big moves like we know these miners are capable of. And keep in mind, Anthony, we've seen multiple days where stocks are up 20, 25, 30%. It only takes 2 or 3 of those days to get back to where we were trading a couple weeks ago. But again, people lose sight of that and they get their emotions going, and that oftentimes gets the best of them in these situations. So the next chart, you guys, this one takes it a step further. So we've talked about the current numbers. We've talked about the current share price and percent gains or losses, I should say, this year. The next chart, Anthony, talks about the future net earnings based on a couple of assumptions we'll talk about here. The earnings per enterprise value ratio, and then a ranking to kind of compare and contrast these companies. So this is where it gets really interesting for me, Anthony, because some of these companies, they're basically trading at a 1-to-1 enterprise value to forward earnings ratio. And I'll let you talk about that one next.
Yeah. I mean, just to go through some of the assumptions we used for this is, so looking at the Bitcoin price, used a figure, as we go past the halving of 100,000, the global hash rate, I've used 750, exahash. I mean, it's at the 600 at the moment. There probably is going to be a small drop post the halving, but because the Bitcoin price is so well at the moment, I don't see, a significant drop. And actually, we know there is a lot more mining machines coming online. So these companies are going to be double, treble the size they are if their plans come to fruition by the end of the year. A lot of these, look at Bitfarms, look at IREN, they're going to grow from their 7 and 8 exahash respectively to 21 and 20 exahash by the end of the year. CleanSpark are effectively going to double where they are at the moment. So they've just reached 17. They want to get to 32. And they may even go further than that quickly. They just put a massive order in for more mining machines. So, all this extra hash rate coming on there, I don't foresee, the hash rate, the global hash rate, coming down significantly. I think it will still carry on. So using that figure, by the end of the year, 750. Transaction fees I've applied, at 10%. And transaction fees, really important to Bitcoin mining. End of the day, what will happen is if it becomes really unprofitable to mine, transaction fees will end up costing more to do things. So miners will start getting revenues from the transaction fees as well as the block rewards. And so that's the great thing about how Satoshi worked this out. And we're seeing other types of fees coming through now from the ordinals and from other types of fees that miners are benefiting from. But we're seeing, we had a spike in May last year, we had a spike in December, and was probably, from what I'm hearing and what I'm seeing at various conferences I've been to recently, this thing will carry on, and fees will start to improve significantly. So that'll keep the miners occupied. But what does it mean? It means that at the price we are at the moment, it means maybe more miners are making some profit by being switched on.
It sure does.
Because if you've got an inefficient miner switched on in an area where they've got really, really cheap stranded power, that could be the same as having the most efficient miner, but you're paying slightly more for the power. So it's, the best scenario is have the most efficient mining machines, so they're currently the S21 Pros, and having the cheapest rate of energy to support that, and therefore you're in a win-win situation. But you can see how having efficient miners and a slightly higher cost of power can be compensated by having less efficient miners and a cheaper rate. So that my theory is that there'll be more miners staying on if the Bitcoin price is at the moment and it rallies past the halving, as these ETFs continue to buy. And when we talk about ETFs, I think now we're literally days away from the BlackRock ETF having more Bitcoin than the GBTC fund. So that's literally days away now. I think there's not significant amounts at all left now in terms of Bitcoin between the two of them.
That's the nice thing with the GBTC, Anthony. It can't go past zero, right? So at some point, the selling's got to end. But yeah, it's taking a little bit longer. But when you look at this table, you guys, the top 5 here, you've got the Bit Digitals, the Bitfarms we've been talking about, Hive, a lot of the companies that have really struggled this year, really starting to look quite attractive from an earnings to enterprise value. And keep in mind, you guys, generally in bull markets, especially in the tech sector, it's not uncommon to get 10 for sure, but a 15, 20, 25, 30 PE ratio on these companies, right? So if you're looking at future net earnings, say Bitfarms, $228 million, multiply that by 10 or 20 and you can get an estimated market cap significantly lower than the market caps we're seeing really across the board for these companies. Now, that being said, you guys, again, the timing is anyone's question, right? These companies could correct tomorrow. They could not correct for the next 4 years. We have no idea, but at some point, the assumption would be Bitcoin miners benefit from higher Bitcoin prices, And I think it's fairly hard to argue with that over a long time period. So a great table here, Anthony. I'm sure we'll get some objections about the $100,000 Bitcoin assumption. I also want to call out you guys. We've got Cypher in there. A lot of people have been asking about Cypher. So here you go. Eat your hearts out. It's in all of these tables. And that takes us to the final one here, Anthony. The big kaboom, the final full table here, all of the data included, really quite a holistic view at the current landscape of the Bitcoin miners and the potential opportunities or arbitrage opportunities we're seeing here in terms of the risk reward profile. So I'll let you finish up with this one and take us home here, Anthony.
Yeah, so this final chart looked at a number of valuation metrics. So we've already discussed the market capitalization, looked at the enterprise value. I looked at the current hash rate for these mining companies and also looked at what I call the near future hash rate. So basically, where would they be by the end of 2024? And I think that's sensible because I think Riot have indicated they want to get to 100 exahash, but that's not going to happen this year. That'll happen in a few years. And if you're looking about revenues, what they could be achieving by the end of the year, annualized, I think it's sensible to sort of look at the near future position. Also, then look at the price to book ratio. So that's looking, at the share price versus the net asset value, and that's quite interesting as well because if you've got the lower that ratio is, the better the company is from a sort of you are literally paying for the assets of the company. So if we, in terms of looking at, when we discussed this already, if we go down the list there, look at IREN. IREN's net assets are effectively now, in terms of compared to the market cap, they're actually higher than at the same level as the market capitalization. So you are buying, for every dollar investing at the moment, that's what the book value is of the company is. Compare that to say, look at CleanSpark, where their share price is at a premium at the moment because they've got this 17 exahash. But for every dollar that you're investing from a share price, that's 3.6 times more than the book value of the assets held in the company at the moment from the most recent earnings report. And we'll see that earnings report change when they issue the Q1, because obviously they increased a significant amount of mining machines. So, but it'll still be quite a high ratio. It won't come down that much. But it just goes to show, if you're doing comparisons, and this is, again, we'll articulate this, these are metrics individually. You need to do a lot more due diligence to determine, not here to say which are the best miners today, but we're just looking at various valuation metrics, and there is some sort of correlation to some of these as well. So you can then take the value of the hash rate that you've got deployed, and again, using enterprise value to look at what your current hash rate is, and using enterprise value to what your future hash rate is, to see what the value is from a terahash perspective. And again, if you look at the likes of Bitdigital, scores well in both current and future, has a valuation of its future hash rate of about $12.44 per terahash, and compare that to say Cypher, which is $106 per terahash. So significantly higher valued. Now there's an argument. People say, "Oh, but Cypher mines significantly more." Yes, it does, and it's got the premium built into that price there. But bear in mind, Bitdigital, is a smaller miner. It's growing into HPC. It's got one of the biggest HPC annualized contracts at the moment out there, 50 million a year. It's going to grow its hash rate to about 6 exahash by the end of the year, which in terms of its peer group, it's still not, we're looking at double digits for the end of the year for the majority of the miners in this table. But it shows that there's some value in that stock, and people should be, looking, as a starting point, try and do a little bit more due diligence in that there. So that table really sort of highlights, and you can see, if you look at the ones that are ranked, at the lower end of the scale, they really are the sort of the CleanSpark, the Cypher, and the Marathon. and that's sort of like interesting. I mean, those stocks have have had they're all market capitalizations over $1 billion, and Marathon's market capitalizations over $4 billion, and CleanSpark's is not too far behind. They're just under $3 billion. So they've had CleanSpark's had a really good run since October. I mean, it was 600 million valuation in October, and 6 months later it was at 4 billion. So that's gone up really, really well, and people have benefited from that. But when you start looking then at the value for the exahash they've got, it then looks like it's like significantly higher than its peer group. So maybe some of these other miners have got potential to catch up. But then you've got to start looking at what are they delivering monthly in terms of production? What's the cost of their production? So there's lots more metrics that you need to consider before you start saying, oh, from a value perspective, they look really good at the moment. You've got to do more due diligence, but it does give you a sense of where to start from.
Well, and I was going to say, Anthony, yeah, not all terahash or exahash is created equally, right? A lot of these rigs are more efficient. Maybe they're getting more out of their rigs. That's where it goes to the efficiency, the productivity metrics. So again, you guys, this is a standalone metric, but a great lens to look at it. The other one that just gets me is Hut 8, Anthony. We just saw this merger take place. They came to the market saying this is a merger of equals, right? Valuing initially around $500 million each for Hut 8 mining and for US BTC. Now they're trading pretty close to their HODL, which said another way essentially means you're getting all the HPC, the interior health contract, the AI stuff, all the infrastructure for free, right? When you start to look at the book value of a lot of these assets. So again, one individual metric, there's obviously some concerns with some of these miners as well. But the thing that you can say confidently is they're a lot better deal now than they were last month. And if your outlook on Bitcoin and Bitcoin miners has not changed in the last 30 days, you're in a lot better spot purchasing now than you would have been a month or 2 months ago. So that being said, you guys, the decision is up to you. Unfortunately, I've seen almost daily people commenting saying, I can't take it anymore. I've sold my miners. I've been shaken out. And that's exactly why you want to be in this space for a while. I remember those days, Anthony, where I was physically sick because of my portfolio and my account going down. But you learn to live with it, and you need to stomach the volatility if you want to get that big upside potential, right? It just goes high risk, high reward. So there you have it, you guys, a very in-depth analysis in today's video. Hopefully this gives you even more confidence in this space. If you have cash sitting on the sideline, it may be worth looking at some additional due diligence on these companies, as we definitely feel there is a mismatch now between valuation and reality in terms of the Bitcoin market and sentiment around the world. Anthony, I'll give it to you for last thoughts here. We appreciate you taking the time to put these tables together and walking us through your thinking in today's video.
Yeah, times are challenging with some people at the moment because we didn't expect miners to drop so much since the start of the year. But I always find listening to podcasts, and if you put a Michael Saylor podcast on for a couple of hours and get his latest update, and it sort of like makes the world feel a lot better because he's able to articulate it really well. And there are a number of other people that can do exactly the same, but he's one of the biggest people in the space. He's committed to Bitcoin, and so he's not losing any sleep. He's probably sleeping well every night. And there were times in December 22, maybe he was thinking, what have I done at that point when Bitcoin price was 15,500? But he's been strong all the way through this, and so put a podcast of his on and listen to that for half an hour, and it makes you wonder that you're in the right place. And as I say, we've seen these cycles with the Bitcoin miners. If you've done your due diligence and you've looked at where the value is there, and you've made the right decisions, I'm standing by what I've done the last 18 months, learned a lot of information in this space, and we'll see them come good. I can't, understand some of the valuations at the moment. It's just ridiculous. We've got two or three companies there where the book price, if you're buying them companies at the market valuation at the moment, you're getting more than a market capitalization from the company. So, it's really, we'll see, what's really causing this, and whether there's other factors that we haven't discussed, whether it's, again, it's still, there's a lot of short action in the space, waiting for that turnaround. But once it turns, it can be explosive. I remember in 2020, when I first purchased Marathon Digital, and it was a few dollars a share, and we saw that share price go from $2 to $80 during 2021. So that's 40 exahash on where I purchased it from. So there are some significant movements in these prices here, but as long as you've done your due diligence and you've seen the value in the stock, and it's doing all these metrics, you've looked at the production, you've looked at the cost per Bitcoin. These mining companies are giving you all that information. It's out there. You can determine how much it costs to mine a Bitcoin for all these companies. It just takes a little bit of time to get it. Some of them now put it in the presentations. Read the presentations that they put out every quarter. Some really good information about that. But lots of due diligence before you make a decision.
And that's what I was going to say, Anthony. Two things: due diligence and take profits. It doesn't matter if Marathon goes up 10x, 20x, 40x. If you never sell it, you're not going to reap any of the benefit. And that's why we tell you guys to do your own due diligence. If you only listen to other people, when times get tough, it's very easy to start second guessing those people and their thesis and their ideas. If you know these numbers and these companies inside and out, and you watch the interviews, you understand the CEO's mindset, the share price won't affect you as much because you're confident in your decision and you're confident in your research, right? Just like athletes who prepare, you don't go climb a mountain with no preparation. You want to be able to trust yourself, trust your instincts. That's exactly what you need to do in the tough times here, you guys. So hopefully this has instilled some confidence. Anthony, always a pleasure to have you on the channel. Thanks for everything today. We'll see you tomorrow, and make sure you guys feel free to subscribe, hit the like button, and leave a comment in the section below letting us know your thoughts, and hopefully the fact that you're holding strong and continuing to accumulate in this pullback. Thanks so much. We'll see you tomorrow.